Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you learn about stock investing and personal finance that will help you become a great investor. In today's video, I'm going to talk about Pinduoduo stock. Is Pinduoduo stock better than Alibaba and JD.com stock? And what are Pinduoduo's long-term growth prospects? In this video, I'm going to cover these topics. First, stock performance comparison. Second, e-commerce market share in China. Third, Pinduoduo's business model. Fourth, Pinduoduo's long-term growth prospects. Fifth, user growth, revenue, and net profit growth. Sixth, Pinduoduo's valuation comparison. Seventh, Pinduoduo's major risks. Eighth, what I will be doing going forward. If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. Let's start. First, stock performance comparison. Pinduoduo stock performance performed exceptionally well compared with Alibaba and JD in 2020. Between January 8, 2020 and January 8, 2021, Pinduoduo stock soared 338.66%, while JD increased 129.44%, and Alibaba increased only 4.26%. Alibaba is the largest e-commerce company and a near monopoly in China. Alibaba stock underperformed in 2020 because of the current anti-monopoly probe on Alibaba, the risk of getting delisted from the US stock exchange, and the Holding Foreign Companies Accountable Act that will delist Chinese companies if they cannot be audited by the US Public Company Accounting Oversight Board (PCAOB) within 3 years. In comparison, Pinduoduo and JD have been much less impacted by the recent US and Chinese regulations. I will talk about Pinduoduo's major risk in this video. E-commerce market share in China. Alibaba is the largest e-commerce company with the largest market share in China. JD.com is the second largest e-commerce company in China in terms of market share, and Pinduoduo is the third largest. Most customers in China use all three e-commerce platforms to shop online using their smartphones. According to eMarketer.com, in 2019, Alibaba had a market share of 55.8% compared with JD's 16.4% and Pinduoduo's 8.1%. In 2020, Alibaba's market share is estimated to be 56% compared with JD's 17.1% and Pinduoduo's 10.5%. And in 2021, Alibaba's market share is estimated to be 56.6% compared with JD's 18.1% and Pinduoduo's 13.1%. If we combine all their market shares, Alibaba, JD, and Pinduoduo have an estimated total market share of 87.8% in 2021, which means they dominate the entire e-commerce market in China. Pinduoduo's business model. Pinduoduo runs a team purchase consumer to manufacturer C2M business model. This is very different from Alibaba's business to business B2B, business to consumers B2C, and consumers to consumers C2C marketplace business models. Pinduoduo's C2M business model is also different from JD's online retail store, which is a business to consumers B2C business model. If you want to learn about Alibaba and JD's business models, long-term growth prospects, and risks, I've linked my videos about Alibaba and JD in the video description. Pinduoduo's team purchase business model is very similar to group buying. Pinduoduo customers save a lot of money by initiating a team purchase or joining an existing team to buy the same product as a group directly from the manufacturer. For example, if enough people are joining a team to buy a bag of face masks from this manufacturer here, the cost will only be 1.9 RMB per bag. But if you buy the same bag of a face mask without joining a team, the retail price will be 10 RMB per bag. Under Pinduoduo's C2M business model, the manufacturer gets real-time customer data analytics from Pinduoduo to find out what customers want to buy as a group. Once enough customers are joining to buy the same product as a team or group, the manufacturer can give them a much lower price and ship the product directly to customers. Now, this saves a lot of money for both the manufacturer as well as the customer because it cuts the intermediary such as the distributor. According to Pinduoduo's latest filing as of November 16, 2020, Tencent Holdings, the owner of WeChat, owns 16% of Pinduoduo. WeChat is the largest social platform in China with more than 1.17 billion users. Pinduoduo uses WeChat to allow customers to invite all their friends and families to join their team purchase. Without Tencent's backing and the WeChat partnership, Pinduoduo's revenue and monthly active users would not be growing as fast as now. Another important thing I should mention is that Pinduoduo dominates in the lower tier 3 and 4 cities in China, where customers are much more price conscious and less concerned about lower quality products. In comparison, Alibaba and JD dominate in tier 1 and 2 cities in China, where customers are less price conscious. Customers in tier 1 and 2 cities in China mainly use Alibaba and JD to buy higher quality products. What are Pinduoduo's long-term growth prospects? As of now, China has the largest population in the world. According to Worldometers, China has 1.44 billion people compared with India's 1.38 billion and United States 331 million. China has the largest e-commerce market in the world, the most smartphone users and internet users in the world, and the second largest retail market in the world that is almost as large as the US. According to the latest December 2020 market forecast from eMarketer.com, China's total retail sales are expected to be trailing behind the US between 2020 and 2024. Now, I said this in my previous Alibaba and JD stock analysis videos. I believe the Chinese e-commerce market is large enough to have 3 dominant e-commerce players, including Alibaba being the largest player, JD.com being the second, and Pinduoduo being the third. I believe Alibaba, JD, and Pinduoduo will continue to benefit from the current trend of more and more people shopping online using their smartphones, whether it's buying groceries or electronics or everyday items online. The current pandemic has accelerated e-commerce growth to at least several years ahead in China as well as everywhere around the world. Here's a growth catalyst Pinduoduo management discussed in the latest Q3 2020 earnings release. Pinduoduo management believes that agricultural products under Duoduo Maicai will be a huge growth opportunity for Pinduoduo going forward. But the biggest problem now is that there is not a dedicated logistics infrastructure network for agricultural products. Pinduoduo will be investing a lot of capital to build its logistics infrastructure for its agricultural products going forward. This means we should not expect Pinduoduo to have positive net profit within the short term for probably at least 5 years. User growth, revenue, and net profit growth. Pinduoduo is still losing money every quarter, even though its revenues are growing rapidly every quarter. Pinduoduo stock performed exceptionally well in 2020 compared with Alibaba and JD because Pinduoduo's current revenue growth is much higher. So for example, in the quarter ended on September 30th, 2020, Pinduoduo's total revenues grew 89% year over year compared with JD's 29.2% and Alibaba's 30%. Now, in the same quarter, Pinduoduo's annual active users grew 36% compared with JD's 32.1% and Alibaba's 9.2%. As of now, the biggest e-commerce user growth is coming from tier 3 and 4 cities in China, dominated by Pinduoduo. Because the e-commerce market is not fully saturated in these lower tier cities yet. Going forward, I believe it will take Pinduoduo at least 5 to 10 years to become profitable. Pinduoduo still needs to invest a lot more capital in its logistics infrastructures. Valuation comparison. In terms of valuation, we have to compare Pinduoduo with JD and Alibaba to see if Pinduoduo is overvalued right now. Since Pinduoduo is not earning any profits yet, I can only compare its stock valuation based on the price to sales ratio and the price to cash flow ratio. Now, I've compiled these numbers from Morningstar and the latest earnings reports ended on September 30th, 2020. If you look at this table here highlighted in red, you will see Pinduoduo's price to sales and price to cash flow ratios are much higher than JD and Alibaba. This is because Pinduoduo's revenue is growing at a much faster rate than JD and Alibaba. However, we also have to look at Pinduoduo's net loss and market cap. For the quarter ended on September 30th, 2020, Pinduoduo had a net loss of 784.7 million RMB compared with JD's 7.6 billion RMB net income and Alibaba's 28.8 billion RMB net income. At the time of making this video, Pinduoduo's market cap is at 221 billion compared with JD's 142 billion and Alibaba's 639 billion. I believe Pinduoduo is overvalued right now relative to JD and Alibaba. Now, what are Pinduoduo's major risks? The first major risk is that all Chinese stocks in the US have the potential of being delisted. President Donald Trump signed an executive order in November 2020 to ban all US investors from investing in any Chinese companies that are owned or deemed to be affiliated with the Chinese military, even if it is not true. For example, the New York Stock Exchange announced that they're delisting the 3 Chinese telecom companies, China Mobile, China Telecom, and China Unicom by January 11, 2021. Also, under the Holding Foreign Companies Accountable Act, HFCAA, the Chinese company can be delisted if it cannot be audited by the US Public Company Accounting Oversight Board, PCAOB, within 3 years. If the Chinese stock is delisted, investors will be forced to sell their shares at a much lower price. The second risk is that Pinduoduo may be overstating its gross merchandise volume and active buyers, which are 2 very important metrics to show how well Pinduoduo is doing every quarter. Here is how Pinduoduo defines its gross merchandise volume. GMV are to the total value of all orders for products and services placed on our Pinduoduo mobile platform, regardless of whether the products and services are actually sold, delivered, or returned. But according to Investopedia, GMV refers to the volume of goods sold via customer-to-customer or e-commerce platforms. Now, I may be wrong about this, but it appears that Pinduoduo is counting all customer orders on its platform as gross merchandise volume, even if the products are not sold. Pinduoduo may also be overstating its annual active buyers. Pinduoduo defines active buyers in a given period are to user accounts that are place 1 or more orders on our Pinduoduo mobile app or through social networks or access points in that period, regardless of whether the products and services are actually sold, delivered, or returned. Again, it appears that Pinduoduo is counting buyers as active buyers, even if their products were not actually sold or delivered. This means Pinduoduo may be overstating its annual active buyers. The third major risk is that both Alibaba and JD released their C2M platforms, Taobao Special Edition and JD Jingxi, to compete directly with Pinduoduo in the lower tier 3 and 4 cities. Pinduoduo relies on its partnership with Tencent's WeChat to grow its customer base. Now, as long as this partnership is still there, I believe Pinduoduo will still dominate in tier 3 and 4 cities in China. I mentioned the fourth risk earlier already. I believe Pinduoduo is overvalued right now if we compare its latest net loss and market cap with JD's. What I will be doing going forward, I have long position in Alibaba and JD ADR shares, representing less than 5% of my portfolio. Now, I do not own Pinduoduo stock. I will likely buy more Alibaba and JD shares in the future and also invest in Pinduoduo stock once the Biden administration considers changing or reversing the regulations that could delist Chinese stocks. I personally think the chance of delisting Pinduoduo, Alibaba, and JD is small because, as far as I know, they are not state-owned companies, and because delisting these large, just Chinese stocks will have a huge economic impact on many US investors, especially delisting Alibaba. But to be safe, I will still wait for President-elect Biden to see if he will reverse or change the current US regulations, delisting Chinese stocks first. If you like this video, hit the like button, subscribe, and turn on the notification button. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching.